economy grew at an annualized rate of 2.6% in the second quarter.
Whenever there's a talk about economic growth, it all boils down to 11 sectors, and these are the sectors that S&P 500 is divided into. Today we're going to look at sector SPDR ETF. These are 11 sectors. We're going to look at overview. We're going to look at performance and the chart. And I'm going to show you how you can use them to your advantage to invest your money and gain a return that is superior to the S&P 500 itself. So if it's your first time, just make sure you subscribe on this channel. I talk about money and investing and anything related to your finance, communication service, consumer discretionary, consumer staples, energy, finance, financials, healthcare, industrials, materials, health, real estate, technology, utility. If we look here, we're going to look at exactly how much each one of them weighed in S&P 500. Communication services, 8.81%. Consumer discretionary is 10.68%. Consumer staples is 6%. Energy is 4.22%. Financial is 12.68%. Healthcare is 12.64%. Industrial is 8.23%. Material is 2.38%. Real estate is 2.38. Technology is 29. We look at the utilities, only 2. If you look at that, you can see that only communication, technology, healthcare, and financials are the one that has the most weight, and the biggest one of them is technology. But you look at the real estate, material, they're very little composition in S&P 500. They weigh them less. So that's a disadvantage that S&P 500 has versus the individualized sectors. You can invest your money and beat the market, or you can do something called sector rotational. Before we go into sector rotational, how to invest, we're going to look at the chart here. This black line here represent S&P 500. So these 3 lines, we look at technology, we'll look at communication services, and consumer discretionary. These are the 3 sectors that has surpassed the S&P 500 when it comes to performance. And the rest of everything else is way down. And when you look at XLU is the least down. This is utilities. We look at actually all return. We can see here communication services is 5%. We look at the consumer discretionary is 8%. Consumer staples is 6%. Energy is 7% since inception. So since these funds are incepted, or if we look at the year to date, 1 year, we can see communication services has amassed 35% return. Consumer discretionary is 6%. We look at technology is 29%, but we look at everything else, like utility right now is 7%, and altogether since inception has only returned about 6%. Real estate right now this year has returned about -6%. When we look at the since inception is only 7%. So all in all, the only sector that is actually par to the S&P 500 since inception is consumer discretionary, communication services, and healthcare and technology. But the rest, everything else is really kind of underperformed the S&P 500. So because of these performance differences, you can use this performance to your advantage to invest, and these are the strategy you can use. Advantage of sector SPDR ETF versus S&P 500 itself. So you have diversification. First of all, we know S&P 500 is divided into 11 sectors, not equally. So for example, right now our performance is only on technology and communication services. By using diversification, you can actually diversify your portfolio equally. So you diversify more rather than just having a big chunk of your money just in technology, which right now is almost 30%. We look at the low expenses. So if you were to invest in all of them equal weight, right, expense ratio will be 0.1. It's a little bit more than S&P 500. For example, VOO is only 0.03. Asset allocation, right? As I've said, you can asset allocate it your portfolio. Utility, for example, is going to do well next month. You can actually buy more because you're buying cheaper. Versus right now, if you're buying in technology, which has returned massively, almost 35%, you might not get more return going forward. Tax efficiency, there's a tax efficiency for that. And if you want to do tax harvesting, flexibility, there's a flexibility of whether you can say technology right now has performed massively, so you can sell technology, for example, and you can take the money that you have earned in technology stock to buy, for example, utility or a real estate, right? Transparent, because it's transparent, you know exactly what you're owning. Rather than S&P 500, you don't know what you're owning. how much it is. But with this one, you know exactly how much you own. So there's transparent to that. Dividends. So let's talk about dividend. This is something very good. If we look at these sectors here, we know, for example, communication service, there are very fewer companies that pay dividend. Consumer discretionary, they don't pay much dividend. Consumer staples, energy tends to pay a little bit more dividends. Financial pays more dividend. Utility pay more dividends, and real estate pays more dividend than others. So for your dividend strategy, what you can do, if your goal is to get more dividend in S&P 500, because S&P 500 only pays about 1 to 3%. So now you want to make it more dividend by using S&P 500. What you can do, you can put more, your portfolio, you can weigh more in utility, you can weigh more on financials, and you can weigh more on energy. That way you gain more a dividend from these three sectors, while you keep technology lowest, for example, for growth. That's how you can use these ones to get advantage when it comes to dividends. And tradable, of course, they are easy to trade. So those are the things, advantage of these sector SPDR ETF. There is diversification, there's low expenses, there's asset allocation, tax efficiency, flexibility, transparent, and dividend. So in this video today, I just want to keep you up to date on how you can use 11 sectors of the S&P 500 individually to beat the market by using strategy of for example, selling the outperformers, and you can buy the underperformers or laggard. You can buy the laggard, for example, and put a lot of money on that. You make more dividends, and also when these goes up, your portfolio, because you already gain massively on this one. So those are the things I just want to keep you up to date on that. If you're the first time, just make sure to subscribe, and if you like this content, just give me a like. Till we meet again on the next video. Bye bye.